But I think I will use the word doomed in the long term.
Where would you rather be invested right now when you look at the world as a whole?
Some changes are coming even for a dominant currency such as the dollar. It could become a less important payment currency in international transactions.
If you're someone from Argentina, Venezuela, or Russia, you understand the realities of what can happen when your home currency fails. It's a big deal, and it can cause immense financial damage to the economy and individuals. But is it actually realistic to think that the US dollar, the world's reserve currency, could collapse too? Let's directly cut to the chase. It's unlikely, but it's not impossible. Nothing is in the world of money and finance. For investors, it's important to understand the potential outcomes that could impact their finances, even if they're unlikely. So in this video, we're going to walk you through what actually happens when a currency collapses, how it could impact investors, and what they can do to protect against it. A currency collapse is when a currency loses all of its value. This might seem crazy, but it makes more sense when you consider that money is simply an IOU from the government. It used to be that paper money, coins, and even numbers on a bank statement represented an amount of gold in reserve. In those days, money represented an IOU for that amount of gold. Now, the system isn't fully backed by gold, but the concept remains the same. Now, they're backed by the weight of the United States, reflecting everything within the economy. So in order for a dollar to have value, society needs to believe that the United States has value. March 2023 brought an economic bloodbath in the United States. One of the most prominent American banks, the Silicon Valley Bank, which was counted as one of the top 20 banks in the U.S. with over $250 billion in assets, collapsed. The bank suffered a massive loss of $1.8 billion due to the interest hike on U.S. Treasury securities. Days later, New York-based Signature Bank, with over $110 billion in assets, collapsed because its deposits exceeded the maximum permissible limits of the U.S. Federal Deposit Insurance Corporation, while the share price of First Republic Bank, with over $215 billion in assets, had fallen by 67%, and that of Western Alliance Bank Corporation had fallen by 90%. Not only this, the credit ratings of almost every prominent private bank in the United States have been downgraded. Prior to all this, Silvergate Bank, another institution dealing in cryptocurrency, also failed because of liquidity issues in the first week of March 2023. The way American financial institutions are falling one after another predicts a kind of economic doomsday for the Western superpower. All these banks have a single story for their failure, which is directly linked to the interest on U.S. Treasury bonds. As the demand for the U.S. dollar is decreasing in the world, these bonds are also falling. And in order to make them float, banks have no solution but to offer higher interest rates, which burn holes in their liquidity. And when renowned economist Dr. Nouriel Roubini, also known as Dr. Doom, who predicted the global recession of 2008 with utmost accuracy, is not only predicting another global economic collapse, but also cautioning that this time, problems are going to last long, maybe a decade or more. One of the main reasons for this upcoming recession would be de-dollarization. The American dollar, once considered the only currency for global trade, is losing its shine and being replaced by other currencies. Naturally, it is going to impact the American economy in a big way and can trigger an economic catastrophe for the topmost superpower of the world. The dollar weakened on March 13th as markets bet the Federal Reserve will slow, if not halt, its raising of interest rates to curb inflation after U.S. authorities moved to limit the fallout from the sudden collapse of Silicon Valley Bank. President Joe Biden said the administration's swift actions to ensure depositors can access their funds in Silicon Valley Bank and Signature Bank should give Americans confidence that the U.S. banking system was safe. The Fed on Sunday announced it would make additional funding available through a new bank term funding program, which would offer loans of up to 1 year to depository institutions, backed by treasuries and other assets these institutions hold. The dollar fell, with the dollar index, a measure of the greenback against 6 other currencies, sliding 0.59% as short-dated treasury yields tumbled and reduced a major driver of the U.S. currency's recent strength. The 2-year note's yield plunged 57.2 basis points to 4.016% in the biggest one-day drop since the Black Monday stock market crash of 1987. Despite the quite significant financial risk nature of these developments over the past few days, we really haven't seen a bid for the dollar from a safe haven or liquidity point of view, said Sean Osborne, chief FX strategist at Scotiabank in Toronto. It is largely a reflection of the market's repricing of the Fed rate outlook, at least in the short-term point of view. Fed funds futures slid, with expectation of the Fed's terminal rate sliding to 3.84% in December from above 5% last week. Goldman Sachs, among other big banks, said it no longer expected the Fed to deliver a rate hike at the end of its two-day policy meeting on March 22nd. Barclays said that the latest bout of financial market jitters introduced significant uncertainty into the market and that policymakers will pause at next week's meeting. Futures showed a 43.9% chance of no increase in rates at next week's meeting, according to CME's FedWatch tool. A week ago, futures were pricing about the same probability of a 50 basis point rate hike by policymakers. Given how many taxpayers, businesses, and valuable assets are in the U.S., it's hard to argue that it doesn't have value. In fact, the reason why the U.S. was able to move off the gold standard was because it had so much economic value. So, a currency collapse is when there is no longer any trust that the asset, country, or organization has sufficient value to reflect the currency. This can happen for a number of reasons. For example, when hyperinflation occurs, every dollar becomes less valuable. $10 might buy you a 12 case of Pepsi today, and then tomorrow that same $10 only buys you 6 Pepsis. The currency's value becomes less and less, and this can create a spiral that ends up in it becoming practically worthless. We've seen an example of this in Zimbabwe in the early 2000s. Many countries have high levels of debt these days, but this is all relative to the strength of the underlying economy. When a country has very high debt and a shrinking economy, this can cause a flight of assets and a collapse of the currency. These are just a few examples. Others include trade imbalances, loss of status as a global reserve currency, natural disasters, or war. All of them relate to instability within a country, as the currency is reflective of the global financial system's trust in that country. Unlike any other country in the world, the US dollar has a special place in the global financial system. That's because it is the global reserve currency. That means that it is considered as the safest currency there is, with many other countries keeping US dollars in reserve. This isn't just a theoretical detail, it's a practical one too. For example, many global financial contracts are denominated in US dollars, and many countries who have struggled to maintain a stable currency use US dollars as their own national currency. Right now, there are 11 foreign countries that use the US dollar as their official currency. These include Panama, El Salvador, Zimbabwe, and Timor-Leste. The US dollar has been able to gain and maintain this special status because of the strength of the economy. The US is still the biggest economy in the world by far, with an annual GDP of $23 trillion. Second is China with $17.7 trillion, and way back in third is Japan with $4.9 trillion. All of this is to say, for the US dollar to collapse would take something pretty major, like a World War III type situation. And despite all the uncertainty around the world, the US still remains one of the most stable countries there is. The chances that we see a collapse of the US dollar are very slim, and if it did happen, we'd probably have bigger problems to worry about than our investments, like where to get clean water and what to hunt for our dinner. Currencies can and do collapse, but it's not a minor event. When a currency collapses, it's down to a significant economic or political event in a country that has a huge impact on its citizens. It's not a likely outcome at all in most countries around the world, and that's particularly true for the United States. This is down to the US dollar's status as the global reserve currency. So while technically the US dollar could collapse, the chances of that happening anytime soon are incredibly slim. For investors, currency collapses can impact their portfolios if they invest globally, as they should be. The best way to protect against this is through sufficient diversification. But having assets spread across different industries and in different currencies, it limits the potential damage of a currency collapse on a portfolio. What do you think? Could the US dollar collapse in 2023? Let us know your thoughts in the comments section below.